Hey everybody, it's your friend Jason Pound here answering the top questions asked by home sellers in today's real estate market. Question we're tackling today is a quick, short, and easy one. Why do home sales slow down when interest rates have only moved by a quarter? Well, the short answer, you already know, is money. However, as usual, let me over-explain. It's very important to realize that most people approach buying a house much the way they approach buying a car. The majority of individuals do not have $60,000 sitting in a checking account to go out and pay cash for a vehicle, just the way the majority of folks don't have $500,000 sitting around in a checking account to go out and pay cash for a piece of real estate. As a result, they are not tied to the global purchase price. They are tied to the monthly payment. About the only time they tend to think about the purchase or the sales price in detail is when it comes time for them in the future to sell their own house. Then they're doing some back of the napkin calculations to see how much money they made or lost. So that being said, the psychology drills down to the monthly payment. So in short, it costs about $15 to $16 per $100,000 for every 0.25% movement of the mortgage rate. As the rate goes up a quarter at a time, the payment that's being quoted is going up around $15 to $16 per 100,000. As the rate falls for each quarter that it falls, the payment that's quoted is dropping by about $15 to $16 per 100,000. So a quick, easy example, let's look at a $600,000 house. 45 days ago when we hit the market, rates were at 6.25%, and all the buyers who were looking at it were looking at around a $3,600 loan payment plus taxes plus insurance. Today, we're hovering around 7%, and that same property has a payment now of around $3,900. $300 a month swing. And that's for a $600,000 house. Take it up to $700,000, $800,000, $900,000. People who are using loans to purchase real estate are sensitive to the payments. And it doesn't matter at what price point you're at because everything is relative. Where $300 may not be a big deal to a $1 million homeowner, $300 is worth thinking about for a $600,000 homeowner. While $150 may not seem a lot to a $600,000 owner, if you go down and look at a $150,000 to $200,000 house, all of a sudden $75, $100, $150 a month is a big deal to the budget of that household. So realize many times when you're selling your house, you are upgrading to a larger price point. Also, the people who are buying your house often are upgrading to a larger price point. And although this may not seem like a big deal to you, to the person who's graduating up into your price point, this is a huge deal. And in short, that's why the market slows down every time the rates move up about a 0.25%. It's because it's costing about $15 to $16 extra per 100,000, and that adds up quickly for your average person. My name is Jason Pound with Jericho Pound Realty Group. We service the entire Oklahoma City metro area with hyper-local expertise in South Oklahoma City, Moore, Norman. If we can ever be of service, don't hesitate to reach out. We're here to be of assistance to you. In the meantime, peace out. Have a great life.